Hello, and welcome to Navigating Seasonal Cycles with Jake Bernstein. The information provided in this episode is for educational purposes only. There is a risk of loss in all trading and investing. The results shown are hypothetical and should not be construed as investment advice. And now, over to you, Jake.
Thank you, everyone, for being here again today. We're going to be talking about seasonal cycles, and we're going to do something today that's very unusual. I don't think anyone has ever really done this before as a webinar. I think we're going to see some very interesting things that will help you be a believer, not only in cycles, but in patterns as well. Let's talk about the difference between cycles and patterns. In my work, I consider a cycle and a pattern to be the same thing. But when I went to ChatGPT, she gave me a very long explanation of the differences and similarities between patterns and cycles, which you may want to read sometime. You'll find it very interesting. But for my work, I consider any pattern that repeats to be a cycle or a pattern, regardless. It doesn't matter how I define it. The idea is repetition. We want to take advantage of that repetition. Let's ask the question, are cycles perfect? Some cycles are perfect. Example, the cycle of the Earth, its orbit. So for example, if we take the lunar cycle, it's as perfect as it can be. But as we work down in time, the cycles become less reliable until we get to cycles used by traders. So when we talk about the seasonal cycle in soybeans, for example, we know that it peaks approximately in early July and bottoms approximately in late September. But it's never exact because it depends on the weather. Is it possible to combine cycles and patterns in a grand scheme that can be used pragmatically by traders? When we first started this series, I said we were going to look at the beauty of cycles in combination with the pragmatics of cycles. So we don't just sit back and look at cycles and say, wow, what a wonderful thing that is. Isn't it how beautiful nature repeats? We want to do that. We also want to take the pragmatic side and ask the question, can we use the beauty of a cycle in conjunction with a pattern to create something that is of value in terms of monetary? Can we monetize it? The answer is yes, and I'm going to show you a way to do that today, which I think you'll find very interesting as well as fascinating. We're going to begin by finding a short-term cycle in seasonals. I'm going to do that like this. Referring to seasonaltrader.com. I'm going to go to S&P futures, like so. And I'm going to go to the month of December, actually the month of November, like so. The reason I want to do this is remember that traders are very pragmatic. They're always looking for short-term opportunities. How can we stay in the market for a relatively short period of time to reduce our exposure and at the same time use the power of cycles and seasonals in order to capture profits? So it becomes a double-edged thing, an opportunity to trade short-term, to get out of the market before it becomes too risky, and at the same time use the power of cycles. I'm going to search for cycles in S&P futures that have been right 75% of the time. I'm going to risk 5%. In other words, is there a cycle that's relatively short-term in S&P that can occur with high frequency, high probability, that will give us an opportunity to trade short-term? My definition of short-term is very important. For this purpose, I'm choosing 10 days. So we're going to go to the extensive seasonal database. And by the way, all credit to Richard Smith, who created this program in conjunction with me many years ago. And even though it's a legacy program, it's still working extremely well. So we're going to ask the question, in the large historical database consisting of trillions of bits of data, is there anything in S&P futures in the month of November that has been correct 75% of the time with a 5% stop close only risk over the course of 10 days. So in effect, we're looking for a less than 10-day cycle with high probability that has occurred with frequency over the last 26, 30 years. We're going to do a search. The search we come up with is very impressive because it gives us 2 pages of trades that meet our criteria. And at the very top, it gives us a trade to buy March S&P futures, end of day, November the 2nd, getting out end of day, November the 6th. So we're looking at a very short-term trade with all these relevant statistics and a risk of 1.5%, showing 88.9% accuracy. If you know about trading, you know that achieving accuracy of 60% or higher is quite impressive and very rare, let alone 88%. So let's take a look at the history of this trade. And remember, this is not a recommendation. It's not a guarantee. We know that history does not always repeat the same way, but we do know that history is very stable, especially when it comes to seasonal cycles. So we're going to examine the history of this pattern, like so. And the history is quite impressive, going back 27 years, showing these hypothetical entries and exits. And at the bottom of the screen, the most important thing for traders, performance. So here's the performance. And as you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, probably 11, 12, 13, 14, 15 years in a row of profitable performance. Quite impressive. In fact, what's even more impressive is the fact that over the course of time, even though this trade is known by many traders, there's no top secret here, this trade turns in its best performance ever in this year, in spite of the fact that it has worked steadily all along and that quote-unquote everybody knows it. So the question is, can we take this relationship, this basically 4-day relationship, and apply a pattern to it that will allow us to reap larger profits, to stay in the trade for shorter periods of time, and to maximize its results? Before we do that, let's go back to the list. Oh, by the way, this is the GPT-4 definition of the similarities and differences between patterns and cycles. You might want to read it sometime. It's very worthwhile. Let's go back to Seasonal Trader. Just 1 moment, please. So here we go. Here's the trade we were looking at. What else can we know about this trade? Notice the average profit of 32 S&P points is significantly larger than the average loss. Also a good thing. So therefore, we have a trade that's worthwhile doing. If we wanted to reduce the risk, example, let's say that I didn't want to take an average loss of 22. I could sort for the smallest average loss, like so. The smallest average loss, 12 points, reduces our accuracy to 77%, but in turn, we're getting less risk. So it's a choice that you make when you do a sort. Let's go back to the trade we had originally, which is a 4-day trade. Entry on the close of trading November 2nd, exit on the close of trading November the 6th. Is there anything we can do with this that would help it perform better? In fact, let me get back to the original one. 1 moment, please. So we have this one right over here, 1.5%. So what I'm going to do now is show you something very interesting. I'm going to combine this seasonal tendency with a pattern. And what is that pattern? That pattern is the relationship between the opening price and the closing price of a trade. Let me show you an example of what I mean. I'm going to switch screens now. I'm going to go to a chart, like so. And we're going to change screens, change charts. 1 moment, please. I'm going to put up an S&P chart. And folks, remember the date that we were talking about, November the 2nd to November the 6th. And we're going to go back in time, like so. I'm going to show you 2 lines on the chart. This green line is an 8-day simple moving average of the close. The red line, an 8-day simple moving average of the open. We know there's a pattern in prices. In an uptrending market, the moving average of the close, the green line, is above the moving average of the open. In a downtrend, it's the opposite way. So as you can see right over here, when the market goes into this big move up, as it did here, the 8 close is greater than the 8 open, which defines the bull trend. Same thing happens over here. 8 close, the green line goes above the 8 open, and it has remained in that relationship for the duration of the current bull move. This is the current chart. In a declining move, the opposite situation happens. The 8 close, the green line goes below the 8 open. So there's two things we're talking about here. We're talking about this particular pattern, which is a fixed relationship in the market. It's not perfect, but it's very, very accurate. And we're going to combine that relationship with the cyclical tendency, which we talk about as the 2nd of November to the 6th of November. So we're taking that 4-day period and we're asking the question, is there anything we can do in combination using the 8 open close and the cycle November 2nd to November the 6th? Let me show you what I'm talking about. Let's go back in time to November of this year. Turning forward in time to November of this year. Here we go. Bear with me, folks. So here it is, November. And we're going to go to November the 2nd, like so. Just hang on, please. This is November the 2nd, right over here. Just let me get it for you. Here's November the 2nd. So the market was closed on November the 2nd. Therefore, the trade will be executed on November the 6th, the 4th. You'll notice on November the 4th, the green line, the 8 close was below the red line, meaning this market is in a downtrend. I do not want to be a buyer. There would be no trade this year. Let's go back in time to another day. Let's go back to last year. I'll show you specifically what I'm talking about. And try not to get dizzy, folks. Okay, here we go. Back to November of last year. Just want to show this to you. So, so let's go to our date. November the 2nd of last year. Let's find it. So here it is, November the 2nd. I'm going to mark that line. So that was the entry date. Let's ask the question. On the entry date, was the 8 close, the green line, above the 8 open? Yes. Therefore, signifying a bullish pattern. Since the trade was to be a buyer and the pattern was bullish, it's a double green light. It says it's okay now to buy the opening and get out on the close. So the next day, which is right over here, we buy the opening, get out on the close. The next day we do the same until the 4th, until the 6th of November. Let me show you what I mean. This is the 7th. This is the 6th right over here. So here's a very brief trade. The cycle, buying on the close of trading November the 2nd, getting on the close trading on November the 6th, so the next business day. So these would be the trades. Buy the open, get out on the close. Buy the open, get out on the close. Buy the open, get out on the close. What have we done? We've taken a pattern that's a cycle, a very short-term cycle. We've applied a pattern to it, and we've been profitable every day, buying the open, getting out on the close, based on the relationship between these two lines right over here. I want you to think about that. I'm going to show you another example. Let's go back to the year before, 2023. Again, November the 2nd to November the 6th. So just hang in there, folks. I'm doing this mechanically rather than giving you a picture of it because I want you to see the process. So November the 2nd, right over here. Let's find it. Here's November the 2nd. Right over here. Let's ask the question. On November the 2nd, the green line was below the red line. Therefore, there would be no trade. And this is November the 6th right over here. One moment, please. So let me mark the entry date. Right over here. November the 6th, right over here. So during this period of time, you'll notice the green line was below the red line, indicating a bear market. Therefore, because this was a seasonal buy trade, we would not take the trade. We would not buy the open, get out on the close. There would be no trade this year. Let's go to the previous year. I want to make sure this is crystal clear. So we're going to go to the previous year. Again, if you don't understand it, please replay the video. It should be perfectly clear. It is, at least to me. And maybe perhaps I'm hallucinating. Let's go. Let's go to November the 2nd. Here we go. Here's November the 1st. So this one should be crystal clear to you. November the 2nd. I'm going to mark it. It's the end of the day, November the 2nd. You can see the relationship. The green line, 8 close, is above the 8 open, meaning what? This is a valid, confirmed buy pattern consistent with the buy cycle, which lasts until the 6th of November. That's the 5th over here. This is the 6th right over here. So this is the entire pattern right over here. So let's ask the question. For the duration of this entire trade, was the green line, the 8 close, above the 8 open? Yes. Confirming a bullish pattern, confirming a bullish cycle, buy the open, get out on the close, 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 buy the open, get out on the close. Every single day during this period of time, the close is greater than the open. So therefore what? This enabled a day trader to get in on the open, get out on the close, make a profit every day during these 6 days, during these 4 days or whatever it is, exactly according to the cycle. We combined the cyclical pattern, which gives us pressure to the upside, with the timing pattern, which says, yes, the cycle is confirmed. A perfect example of what we're looking at. Let's go back another year. And remember, we're talking about a combination that very few people understand, very few people use. Until today, it should be perfectly clear to you what to do. Let's go back to previous year. And again, I'm doing this the hard way because I want you to see the process. So we're going to go back to November the 2nd. And remember, if the market is closed on November the 2nd, we enter on the close of trading the next business day. If the market is closed on the exit date, we exit on the close of trading the next business day. So here we go. November the 2nd, right over here. Market is in a downtrend. We don't take the trade. We may mark the day. There would be no trade that day. Try it again. And November the 6th. Here's November the 6th. So look what happened. The very next day, we turned in a positive direction. The green line was above the red line, meaning it's now okay to buy on the open, get out on the close. Buy the open, get out on the close. This trade is over. Let's go back another year. And then I'll come back and re-explain the whole thing just in case you didn't understand my gibberish. So remember, we're taking two things, the cyclical seasonal and the timing trigger, trade pattern. November the 2nd. So here's November the 1st, November the 2nd. On November the 2nd, which is right over here, the 4th, because the market was closed on the 2nd, what was the orientation of our two lines? The green line, 8 close, was above the red line, 8 open, meaning the trend is bullish. Let's go to the 4th. the 6th. Hold on, please. Here's the 6th. So buy the open, get out on the close, profitable. Buy the open, get out on the close, small losing trade. And then last one right over here. Buy the open, get out on the close, winning trade. Let's do it again. Take your time with this because I may not be explaining it as thoroughly as I could. I try my best. Here we go. November the 2nd. Here's November the 2nd. On November the 2nd, the close was below the open, the green was below the red. However, the very next day, the relationship changed. It is now okay to buy the open, get out on the close, profitable trade, and the same the next day, profitable trade, close greater than open, and the relationship remained in that configuration. Let's do another one, just in case. So we'll go back to the previous year. Again, November the 2nd to November the 6th. Here we go. November the 2nd. Again, what was the configuration? The 8 of the close, the green line was above the 8 of the open, the red line, meaning it is now okay to buy the open, get out on the close. Profitable trade. Let's go to the 6th right over here. There's the 6th. So this trade lasted 3 days with the configuration being in bullish pattern mode. The green line above the red line, meaning buy the open, get out on the close. 3 days in a row, profitable trade. Let's do another one, just in case you're not tired of it yet. I want to make sure that I said it right. I want to make sure you got it right. So let's go to the 2nd of November. Here we go. You'll notice in every one of these days, this is the 2nd of November right here. In every case, the 8 close was below the 8 open. Therefore, there would be no trade set here because the configuration was negative, pattern was negative, and even though the seasonal cycle was positive, we did not take the trade because there was no confirmation by the pattern. Let's go back one more year, and then I'll re-explain the whole thing to you. Let's fix the 2nd right over here. One moment, please. Just one moment, please. There's the 2nd. There's the 6th right over here. For the duration of this trade, the 8 close remained above the 8 open. Profitable trade, small loss, small loss, small loss. Very simple. And just in case you didn't get it, I'll show it to you one more time. The previous year. November the 2nd. Here. And a configuration. Do the 6th of November. Break-even trade, small loss, nice profit, nice profit. So just to review, the first step, we find the seasonal cycle, in this case a short-term one. One moment, please. In this case, a short-term cycle. We apply the pattern. The pattern is very simple. 2 moving averages, 8 periods simple moving average of the close is the green line. 8 periods simple moving average of the open is the red line. If the green line is above the red line, we confirm the buy mode, we confirm the bullish cycle, and we can buy the open, get out on the close each day, or a day trade for those of us who don't want to stay overnight. Very simple relationship. I will show this again in future sessions to show you how it's been working, but remember the relationship. We're combining a pattern with a cycle and taking the two. The pattern must confirm the cycle, otherwise you don't take the trade. If you enjoy these sessions, please let me know. I have much more to show you, so please keep coming back. Thank you.